for starting your week with us. Hello and welcome to Business Daily. I'm Lee-Jiun in Seoul. We have a lot coming up today, so let's get started with the day's highlights. Life for the elderly here in Korea can be grim, as a recent report shows that the country ranks first among OECD countries when it comes to working after retirement, but the poverty rate remains high. And duty-free vendors on Jeju Island are expected to take a hit next year when one of their most popular products, cigarettes, get pulled from their shelves. But first, with the Korea-China FTA set to take effect on Sunday, government officials are kicking off their 9th round of free trade talks today for a trilateral deal among Korea, China, and Japan. This latest round of working-level talks will run through all 5 working days this week in Hakone, Japan. An array of issues are expected to be discussed, including customs clearance, intellectual property rights, as well as goods, services, and investment. The regional FTA, meant to be comprehensive and high-level, has been under consideration since November of 2012 and found renewed momentum last month during a 3-way summit meeting that signaled thawing relations among the 3 neighboring countries. And now it's time for a look through last week and this week's stock market action. And for that, we have economics reporter Choi Jin-seok from SBS CNBC joining us on the phone today. Hello, Jin-seok.
Thanks for having me, June.
All right, let's first get started by looking at the Korean stock market. Tell us about Friday's close and its overall performance last week.
Yes, both the Kospi and Kosdaq closed slightly lower on Friday. The Kospi retreated by 3 points, closing at 1948, while the Kosdaq was down by 0.7%. The sentiment among foreign investors was still negative. Foreigners dumped more than 230 billion Korean won, or $190 million worth of stocks on that day. On a weekly basis, the Kospi fell by 2.2% as rising concerns about falling oil prices hampered global appetite towards so-called risk assets, including stocks. Foreign investors sold 1.18 trillion Korean won, or $990 million worth of stocks for the week. The so-called oil money, or investors from the Middle East, led the massive sell-off into the Korean equity market as well. The price of West Texas Intermediate fell by more than 10%, marking the worst weekly performance this year. The U.S. stock market plunged by the most since August, mainly because of nose-diving oil prices as well.
Now then, how did the Korean stock market close on the first day of this week?
The Kospi fell by more than 1%, continuing its negative performance from last week. Both foreigners and individual investors were net sellers of the market, while institutional investors bought around 300 billion Korean won, or $250 million worth of stocks. Foreign investors have been selling stocks for 9 consecutive sessions. Fears of an interest rate hike by the Federal Reserve, or the Fed, and falling oil prices are still dragging the Korean equity market downward. The tech-heavy Kosdaq market showed even worse performance, sliding around 3.5% to close just above 630. Most sectors were down in the market as well.
Then what kind of market events do we have lined up for this week?
Global financial markets are mostly fixated on what is seen as one of the biggest events in several years, the Federal Open Market Committee, or the FOMC, a policy meeting by the Fed from Tuesday to Wednesday local time. It is widely expected that the Fed will raise its benchmark interest rate for the first time in nearly a decade. The central bank has kept the rate at near zero levels since the global financial crisis. Exiting the so-called zero-rate policy would mean the Fed will enter tightening mode in the U.S. economy. According to the Wall Street Journal, 92% of economists expect the Fed will pull the trigger at this meeting. CME FedWatch, a futures market betting on the Fed's rate hike path, indicates a 79% probability of a December rate hike as well. The focus, though, will also be on the language Fed Chair Janet Yellen uses, because those words will reflect intentions for future policies.
Now, high-yield market jitters have been adding uncertainties throughout global financial markets. Can you tell us more about this?
Yeah, the high-yield market refers to investment into assets that come with high risks but promise high returns at the same time. High-yield bonds or junk bonds, which are typical assets in the high-yield market, refers to a high-paying bonds with lower credit ratings than investment-grade corporate bonds, treasury bonds, and municipal bonds. Under such low interest rates, high-yield investments have been attracting many investors. But since many companies issuing low-rating corporate bonds are exposed to the energy sector, worries have risen lately that these companies will go into default due to falling oil prices. That's why many investors are now pulling money out of the high-yield market. Last week saw the largest high-yield bond fund outflow in 15 weeks at $3.8 billion, according to Bank of America Merrill Lynch. Some may wonder why these uncertainties in the high-yield market have spilled over to the financial market as a whole. The reason is that the sentiment in the high-yield market reflects an overall sentiment toward risky assets. For that reason, market research firm FactSet said the junk bond market moved first before the last 4 big stock market turns. Therefore, we need to keep a close eye on such markets this week as well. This has been Choi Jin-seok from SBS CNBC.
Korea's financial watchdog has laid out detailed guidelines to tackle the country's ever-rising household debt. Now, these measures that take effect starting this February for banks in Seoul and the greater metropolitan area may be effective in curbing debt, but they could cause concerns on a different front. Our Shin Se-min has this report.
Korea's financial regulator is taking a stab at the country's soaring housing debt, fueled by a string of government-led stimulus programs. The Financial Services Commission said starting next year, it'll tighten mortgage screening systems, assessing the borrower's ability to fully repay debt, unlike the current focus, which is more on whether they can repay interest. Applicants will be asked for additional data such as proof of regular income or spending, as well as credit card and insurance payment data, rather than just the value of owned collateral. The banks will also evaluate borrowing limits based on higher rates, keeping in mind the U.S. Federal Reserve is widely expected to boost its benchmark rate from near zero in its upcoming meeting. Higher rates in the U.S. have policymakers worried, as they could ultimately lead to higher borrowing costs in Korea, in turn hurting households that took out loans on the back of a record low base rate of 1.5%. Korea's household debt hit a fresh high at 1,166 trillion won, or some $980 billion as of the third quarter, a jump of 10% from a year earlier. But with the introduction of these new guidelines, some worry about the impact it'll have on the housing market once boosted by eased mortgage regulations.
The new guidelines are only focusing on mortgage-backed loans, while more than half of the loans are taken out for living costs, not to purchase houses. It could in turn dampen the country's housing market.
During the third quarter, home transactions spiked over 20% on year. The financial watchdog attributed the improved housing market to a rise in mortgage loans, with the amount of debt standing at nearly $544 billion in September. Shin Se-min, Business Daily.
Meanwhile, Korean automaker Kia Motors saw its sales in Mexico top 2,000 units in November, a mere 5 months after entering the market. According to the Mexican Auto Industry Association, Kia sold over 2,200 units last month, up nearly 23% from October. Since entering the Mexican market in July, Kia's monthly sales have been growing every month. And the Korean automaker ranked 11th in the Mexican auto market last month with a market share of 1.8%. 2%. Its affiliate Hyundai Motor placed ninth with a 2% market share, and with the goal of joining the top 10 players within this year, Kia has increased the number of local dealerships in Mexico to 46 and plans to expand this to 65 by 2017. Samsung Electronics is expected to expand its share in the chip market with record sales this year. According to market tracker IHS, Samsung is forecast to post fresh highs with sales worth $40.7 billion this year, up nearly 7% from last year. With this, Samsung's market share is expected to reach 11.6%. The Korean chipmaker is second to its U.S. rival Intel with a 14% market share and sales of over $49 billion. Korea's SK Hynix followed with a share of nearly 5%, placing third for the first time. The two Korean companies are expected to make up over 17% of the global chip market this year, ahead of producers in Japan and Taiwan. Now, this all comes as Samsung has been trying to boost its chip business after suffering a setback in its mobile division. It appears that the Korean government's measures to protect non-regular workers have actually ended up having the opposite effect and widened the wage gap between regular and non-regular workers. According to a report released by Korea Economic Research Institute on Monday, wages of non-regular employees dropped from nearly 75% of wages of regular workers in 2005 to just over 65% in 2009. Korea's non-regular employee protection laws were enforced since 2007 and applied to all businesses in 2009. In 2014, the wage ratio inched up to nearly 68%, but the job market remained unstable for many new workers. From 2005 to 2014, the number of hourly workers rose by an average of nearly 8% per year, while the number of regular employees grew by just over 3%. Korea has long been notorious for its long working hours, but a new report has found that Koreans also work the longest after the legal retirement age. The problem is, even so, nearly 1 in 2 elderly people still live below the poverty line. Our Kim Min-ji has more.
Koreans are working more than anyone else in the OECD. According to an OECD report, the actual age at which Korean men retired stood at 72.9 years in 2014. That's up 1.8 years from the previous year and puts Korea number 1 among 34 OECD member countries. The situation wasn't much different for Korean women, who left the job market completely at nearly 71 years old, topping the 70 mark for the first time ever. It means both Korean men and women work more than 10 years after the legal retirement age of 60. But just because elderly Koreans are working longer, it doesn't mean they're making big money. In fact, Korea's elderly population has the highest poverty rate among OECD nations. Among those over 65 years old, almost 50% are said to live in poverty. That's nearly 4 times higher than the OECD average of 12.6%. Korea's elderly also earn about 60% of a worker's average pay, again the lowest in the OECD. With the exception of 5 countries, including Australia and Belgium, post-retirement age workers in OECD member nations were getting paid at least 80% of the average salary. Experts say Koreans end up working after the official retirement age as they need to support themselves due to a lack of income and assets after retirement, and as the majority haven't been able to tuck enough money away. The OECD has called on Korea to expand its social safety net, as well as reform the nation's pension system and labor market. Kim Min-ji, Business Daily.
There's duty-free shopping that can be used by Koreans not traveling internationally, but to Jeju Island, specifically Jeju Airport and Jeju Port. And one of the runway hits there has been cigarettes. But our Eunice Kim explains why that could change next year.
A line of people with boxes of cigarettes, others bags full of them, at Jeju International Airport. This has been a spectacle seen over and over again since the start of this year, when a cigarette tax that nearly doubled the price of a box of smokes was rolled in to encourage smokers to quit. Well, buyers found a loophole at the duty-free shops of Jeju Airport and Jeju Port, where mainland Koreans can dive into their supply with the requisite ticket and passport. Much less than the 4,001 market price, a box of cigarettes here costs a mere 2,500 won, a little over $2, the price as was at the end of last year. And over the year so far, by the end of last month, cigarette sales at the Jeju duty-free shops more than doubled to $58 million in November, taking up 15% of overall sales, only behind cosmetics. Even non-smokers pick up the goods as gifts, sparking charges of hoarding and unfairness to shops that are required to charge 55% more. This has led to an understanding between the duty-free shops and the government, putting to motion a plan to pull cigarettes from store shelves entirely. As the proposition is under review, the stores are asking for an expansion on goods they can sell tax-free to cover what would be the loss of a substantial sales driver. Following the proper revisionary procedures, cigarettes could be wiped off Jeju domestic duty-free stores as early as the second half of next year. Eunice Kim, Business Daily.
And that wraps it up for today. But we'll be back tomorrow with more at the same time, same place. So don't forget to tune in then. Thanks for watching, and bye-bye for now.